Welcome back to Explain the Charts. Today, July 29th, 2025, we're taking an in-depth look at the USDCHF pair, starting with the broader market context and recent news that's shaping its movements. The most immediate news indicates that the USDCHF pair has climbed recently, with the Swiss franc weakening due to diminished safe haven demand. In fact, the current rate sits around 0.80343, marking a notable increase over the past 24 hours. Zooming out, the Swiss franc has generally weakened by over 1.34% against the US dollar over the past month, pushing the rate upwards. However, historically, the Swiss franc has shown considerable resilience and strengthened against major currencies like the US dollar and Japanese yen for most of the year, which sets an interesting backdrop. UBS, for instance, initially lowered its Swiss franc forecasts, then revised them again, noting less intervention from the Swiss National Bank. This aligns with the idea that the SNB might be less inclined to strengthen the franc through direct action right now. A key piece of technical news from just hours ago highlighted that USDCHF fell to around 0.7910 last week, but has since recovered. Now, let's correlate these insights with the actual price action on our charts. We'll begin with the one-day chart to understand the broader trend. Observing the one-day chart from March 2024 to the present, we can see a significant long-term downtrend for USDCHF. This multi-month decline, from highs near 0.91 to 0.92 down to the recent lows, generally indicates a strengthening Swiss franc over the past year. However, the news highlights a more recent reversal. Let's focus on the period from late June through July 2025. Notice the sharp decline in late June and early July, pushing the price down below 0.80. Specifically, on July 23, 2025, the price hit a notable low of 0.7909. This confirms the news report about the pair falling to around 0.7910 last week. What's remarkable is the strong rebound that followed. From that low, we've seen a clear bullish impulse, pushing the price back above the psychological 0.80 level to today's close of 0.80322. This recent upward movement perfectly illustrates the recovered since then part of our news and the general weakening of the CHF in the short term. Now, let's zoom into the 1-hour chart to get a clearer picture of this recent short-term price action, specifically around the recovery period. Looking at the period from July 8th to July 11th, we can observe the immediate aftermath of the previous week's decline. The price was consolidating around the 0.7950 to 0.7980 range before briefly pushing lower on July 9th. You can see the candles from July 9th, 2300 hours Universal Time Coordinated, confirming a low around 0.7925 before the subsequent bounce. This hourly view helps confirm the initial drop and the nascent stages of the recovery mentioned in the daily analysis. The subsequent green candles show consistent buying interest, indicating a shift in momentum for the short term. For even finer detail on the recent rebound, let's switch to the 15-minute chart, focusing on the past few days' activity. Here, from July 23rd evening, you can precisely see the price touching the 0.7909 to 0.7912 area, reinforcing that critical support level. The market then started consolidating, showing indecision before buyers stepped in. Notice the increasing volume on the upward moves, particularly on July 24th and a strong push on July 28th. This surge signifies conviction behind the bullish move, suggesting that the diminished safe haven demand for CHF is having a real impact. The current price pushing past 0.8030 on this time frame shows strong short-term bullish momentum. Returning to the one-day chart for a comprehensive view, let's discuss key price levels, support, and resistance. The primary short-term support level to watch is the recent low around 0.7909 to 0.7910. This level held firmly, marking a significant reversal point. On the upside, the immediate resistance is the current price zone around 0.8030 to 0.8035, which it is currently challenging. Should USDCHF break convincingly above this, The next resistance level would be around 0.8050 to 0.8060, based on highs seen in mid-July. A more significant resistance area lies around 0.8100 to 0.8120, a zone of consolidation from early June. Beyond that, the 0.8200 to 0.8250 area represents a crucial psychological and technical resistance, marking previous consolidation highs from April and May. Now, let's consider the reasons to be bullish or bearish on USDCHF, both in the short and long term. Short-term bullish sentiment is strong, driven by the current upward momentum, the breaking of recent short-term resistances, and the news of diminished safe haven demand for the Swiss franc. The recent recovery from 0.7909 is a clear indicator of buying interest. Additionally, any positive economic data from the US or continued risk on global sentiment would likely further weaken the CHF, supporting the USDCHF pair. However, the long-term perspective, as shown on the daily chart, reveals a prevailing bearish trend for USDCHF over the past year. This suggests that the underlying fundamental strength of the CHF or weakness of the USD could reassert itself. Reasons for a potential bearish reversal include the Swiss economy facing downside risks from external shocks, which could reignite safe haven demand for the CHF. If the current rally stalls and fails to break convincingly above 0.81, we could see a return to the broader downtrend. A decisive move below the 0.7900 critical support would be a strong bearish signal, potentially opening the door for new lows. When deciding when and what price to trade, look for confirmation. For bulls, sustained closes above 0.8040, ideally accompanied by increased volume, would reinforce the current short-term bullish outlook. A successful retest of the 0.80 level as new support would also be a bullish sign. Traders should monitor economic releases from both the US and Switzerland, as these can quickly shift sentiment. For bears, a failure to break above 0.8050 to 0.8060, followed by strong bearish engulfing candles or lower lows on shorter timeframes, would signal a potential reversal back to the downtrend. Any unexpected geopolitical tensions or a downturn in global markets could also quickly trigger renewed safe haven flows into CHF. Always keep an eye on central bank rhetoric, especially from the SNB, as any hints of currency intervention could drastically alter the outlook. The ongoing discussions about a trade deal between Switzerland and Washington could also be a significant market mover in the long run. To recap, USDCHF has shown a strong short-term bullish reversal from its recent lows, challenging immediate resistance around 0.8030 to 0.8035. The critical short-term support is established at 0.7909 to 0.7910. Key resistance levels above current price are 0.8050 to 0.8060 and, more significantly, 0.8100 to 0.8120. Our unbiased prediction is a likely short-term bullish continuation towards the 0.8050 to 0.8120 resistance zone, with a 60 to 70% probability. This likelihood is reinforced if the pair holds firmly above the 0.80 psychological level and if global risk-on sentiment persists, reducing demand for safe haven assets. However, if the rally falters and the price breaks below 0.7900, a significant bearish continuation is highly probable, potentially pushing towards new lows below this level. Conditions that would reinforce a bearish outcome include a resurgence of global uncertainty, stronger than expected Swiss economic data, or any indication of SNB intervention to strengthen the franc. Continue to watch market sentiment, economic reports, and central bank communications for confirmed direction. Thank you for watching Explain the Charts, and remember to always trade with caution and proper risk management.